they're able to get that money back. And that's just not true. If you don't pay any taxes in, you can't get a refund. The only how you can get a refund is if you get different types of tax credits, really a lot of them that has to do with dependents, to get an actual refund back if you don't pay any taxes in. When you have expenses for your actual business, that's called a tax write-off. And the thing that the expenses does is it reduces your gross income, so to determine what you're going to be taxed on. So in my example, I use someone who made 100,000 in income. That's their gross income. That's what they made in their business for the year. And then they spent 15,000 on business expenses. Okay. So in order for you to get the amount that you're going to be taxed on in your business, you're going to subtract the 100,000 from the 15,000, and your net profit is going to be 85,000. Now, if your net profit is 85,000, this is where you have to determine whether or not you want to be taxed as an S corp or you want to be taxed as a sole proprietor or single member LLC. But you can't determine that when you get your taxes done. Okay, you should determine that prior to. But if you have a couple of years where you're consistently making over 60,000 in not gross profit, but in net profit, then you might want to consider being taxed as an S corp. So, but if you're a single member LLC or sole proprietor and you don't make that election and you're not trying to go that way, because there's other reasons business wise that you might not want to be taxed as an S corp. But if not,